Welcome back. As we start the new year, this is one of the most important times to get financially organized. Clean financial slate is going to set the tone for the entire year.
Trying to be financially fit, those January promises that you're making to yourself, make sure that you keep them. We're going to walk through 10 different practical financial steps you could take this year, and they don't all have to be done at once. It's going to help you stay organized, reduce stress, keep your plan moving in the right direction. So Mike, do you want to kick us off?
Absolutely. Number one here is going to be review your cash flow. Get some clarity on your income and expenses. A lot of people spend a lot of money in December, let's face it, the holidays. That's going to distort things a little bit here. So you don't have to be perfect, but I'd say maybe start reviewing November, October to get an idea of what you've been spending. The IRS contribution limits have increased, so you have more money that you're able to save in those IRAs, Roth IRAs, 401ks. Even a small increase early matters. You want to start putting those dollars away instead of having to reassess in July or August. January is definitely the best time to make those changes because you have the full year working for you.
Just to add to that, make sure that you're getting the company match at a minimum, capturing that. And I would say just moving to step 3 is revisit your investment allocation. The past 2 years, equities have performed very well, so your risk might be different than where it was 2 years ago. International had a great year last year, so that international component might be a little bit over allocated. You might not know that until you run the numbers. You want to avoid those reactive changes, and you want to be proactive with your rebalancing. You want to wait till something happens and then make the rebalance there. So the other piece is revisit those withdrawal rates. There's been a lot of changes with inflation and the cost of living and all those things. Spending needs evolve. Maybe you have a big expense to your home coming up this year. Maybe you're going on that big vacation. Just because we have something set up, it's good time to just revisit and figure out where we need to take it from. Do we have to start creating cash now and not reinvest some of those dividends? A withdrawal rate that might have worked last year, we might need to make a small adjustment.
Step 5 goes hand in hand with that. You're going to want to review your emergency fund. You have to make sure that you have the appropriate amount of liquidity for those unforeseen expenses. Avoid dipping into long-term investments. That's the name of the game here. You want to leave those as long as you possibly can. I think that moves us to step 6 here.
If you went through the holidays and any relatives made you upset, you might want to change the beneficiaries. Only kidding. You should be revisiting who the beneficiaries are on your retirement accounts, who they are on the life insurance. What about old retirement plans that you might have lying around? They are separate from your will. So all of what's written down in your estate documents in your will, that all gets superseded by whatever's listed as a beneficiary. And there's also primary and contingents, and sometimes there's some confusion there. Primaries get paid first. If something happens to the primary, that's when it goes to contingent. There's all different nuances to that. We're happy to take a look and make sure that your beneficiaries match your estate plans that you want.
Other things, and this moves us into step 7 here, like life insurance, like you mentioned, that's one that I can't tell you how many times people find the old term policy that they had that is outdated, not enough coverage. They're making a lot more money. They have more children. All those things are going to factor into ensuring that you have the proper amount of coverage. Home, auto, umbrella, obviously those are going to happen every single year, but ensuring the appropriate amount of coverage for those things is important.
Some clients are realizing, oh no, my term policy is set to expire this year. So being proactive in those situations and trying to get new coverage in there, or maybe they don't need coverage, but just having that conversation. And the other conversation, which is the 8th one that we're on, is reviewing tax planning opportunities. Be on the lookout. There's going to be a webinar that we're going to offer specific to taxes. Some of the things that you should be looking at is, are you doing a Roth contribution versus a traditional? What makes sense for you? Are you eligible now for a qualified charitable distribution? What about your withholding? The past few years, I've gotten a lot of emails or questions about, hey, I under withheld and things like that with the IRS because they had all those changes. So making sure that you're withholding the appropriate amount from your paycheck, or maybe changing some of the strategies that you're doing to help. So tax planning isn't just a springtime activity. It's more of a year-round conversation.
And that goes hand in hand with number 9, which is organize your financial documents and your accounts. Knowing where your statements are, if you get them electronically. Getting your financial house in order can start with taking a look at things like the asset map that we provide you and saying, is there anything on here that might be missing? Did I forget about anything? Keeping up with those logins and records is going to make things much more simple for you going forward.
The last step is, if you want, schedule a financial review. I know we'll be reaching out when your time comes, but it doesn't mean that you can't reach out anytime and schedule a call, or you could take a couple steps today and, like Mike said, go back to it, having a conversation with us. We are here to help in any way that we can. I guess we'll see you next time when we do our February video. Thank you.